was an operationally weak quarter for Shakti Pumps, with revenues and net profit both seeing a decline of over 20%. And this has come despite raw material costs falling by about 19%. So let's discuss the quarter gone by with Akhilesh Maru, the CFO of the company. Good morning, Akhilesh. What explains the 22% drop in revenues this quarter? What would you attribute this to?
Actually, revenue has gone down because it is slowed down in the Rajasthan and the MP from the solar pumping side. And if you compare the year-on-year basis, we have gone by only 2%, which is flattish. But on a yearly basis, if you compare the EBITDA level margins and the yearly margin, both has improved. EBITDA has improved from 15% to 18%, whereas the PAT margin improved from 5% to 8%.
But Akhilesh, is this weakness expected to continue over the next few quarters? And what is the reason behind the weakness coming in?
No, this is not going to be continue because we are expecting the other way. We are considering that the backlog, what we have not done in the Q4 because of some issue from the government side is now we are going to do in this year. So for this year, if we talk about it, I think in 18-19 probably will grow by 20 to 25% plus the additional backlog of the previous year that is going to add further to the normal growth.
Akhilesh, do you see state elections or even in the run-up to the union elections, any of these having any impact on the tendering activity for or sales for pumps in general?
May impact positively because election will be in the year end, and after a year, the central election would be probably in the April or May. So positively impact is government will start executing the fast.
Okay. So aside of the government business, what kind of orders are you expecting from the OEMs?
The OEM is actually grown on a yearly basis. OEM has actually grown. OEM business was last year around 65-67 crore, which is now gone up to 87 crore.
All right, Akhilesh, we just wanted to get an idea about your business outside India. What's the outlook here and what are the key markets that you're focusing on right now?
Yeah. Yes, export has grown from 11 crore to 130 crore, which is almost 11% growth with Rajasthan, and this year as expected. In the beginning of the year, we are targeting 135 crore kind of revenue from the export market. And it will continue to grow in the coming years also. Like next year, we are expecting the export will grow by around 30%. And our prime target markets are USA and Africa. USA as it is through our normal dealer distribution network. And Africa, there are three kind of opportunities. First, the normal dealer distribution network. We are expecting others, the International Solar Alliance, under which we are planning to execute some of the projects in few African countries.
Okay.
For solar pumps.
All right. Akhilesh, I also see a lot of cost control measures which have led to that higher operating margins for FY18 despite not too much change that we have seen in the revenues. Your finance costs seem to have gone down despite higher borrowings, and even other expenses have fallen from about 93 crores in FY17 to 76 crores. So what does all these other expenses include?
The other expenses are generally marketing, selling, distribution, admin, manufacturing kind of expenses, and we have some return of expenses also. So because of that, most of the parameters they are improved, and especially the miscellaneous expenses which we already done last year because of Ind AS and all. So the improvement is shown because of all these reasons.